It's challenging for people to devise a strategy or a portfolio or construct a portfolio in such a way to make sure that safety is like priority, but also they got to outpace inflation. We're living a lot longer. There's healthcare expenses and everything else that we've kind of covered.
Yeah, no, absolutely. And you'll hear a lot of people talk about, hey, I want really high returns, but I want to sleep at night and I don't want any growth. And the bottom line is that doesn't exist, right? There is no one magic bullet out there, because otherwise everybody'd go after it, right?
Oh, absolutely. So what are the keys? What are the steps that people should be taking a look at as they transition? We ran into a client recently that went all cash. It was like, well, I heard I need to be conservative when I go into retirement. That might not be the answer. It could be for some.
But it depends on what your horizon is, right? Because maybe all cash is appropriate for the money you need next year, 2 years from now, but that person's probably going to live 2-3 decades or something like that, and they're not going to get any growth. Inflation's going to beat them up, et cetera, right? And so you need that combination of something safe for the next couple years and then growth for down the road.
So how do you break that up? I mean, and then how do you even think about constructing it? You have interest rates at all-time lows. It could go negative, right? The stock market's volatile. We're seeing all-time highs. I mean, this is a really weird time for people that are transitioning into retirement to figure out what they should be doing.
No, absolutely. And what you mentioned about the interest rates, I think that's the big one that really impacts people, and it makes it tough. And what you don't want to do with your safe money is stretch too much for higher returns, right? You need to keep your safe money safe and then get growth from your growth money. And with the growth part of the market, yeah, I mean, some markets are really expensive when you look at certain kinds of stocks, but it's important to realize there's all different kinds of stocks, right? Whether it's international, whether it's in the US, or whether it's big and small, not all of them are really expensive. And the key to it really is to find these different ingredients and put them together to make whatever recipe it is that's going to accomplish your goals.
And I guess too, people need to think about, if I'm living the next 20 or 30 years, right? Do I believe that the stock market is going to be higher in the next 20 or 30 years? And so even though we hear the press and, oh, stock market's all-time highs, 30,000 Dow, and all of this other nonsense that we, flood our brains with, it's like, all right, well, who cares where you go in? When's the exit? If the exit's not next year, then who cares, right? If you have that longer time horizon, I think they'll be, put themselves in a different mindset.
Yeah, and one thing to look at is how many years, you do your cash flow planning, right? That's where it starts. And then it's like, how many years of safety can you have? And so let's say you needed $20,000 a year and you had $100,000 in safe assets. Well, you've got 5 years of spending set aside before you have to worry about the stock market. And that's really how I look at it a lot of the times, is how many years of safety do you have? And then it's like, well, I'm worried about the election, Brian. Well, who cares? Or I'm worried about the coronavirus impact on the economy. Who cares? Because if you don't need to touch your stocks for 5, 10, 15 years, it doesn't matter, because like you said, when you wake up in a decade or something like that, stocks are probably going to be higher.
Yeah, and I think people get confused too about time horizon. Is that I'm retiring next year or in 3 years or 5 years, so then I need to change my portfolio right away. But they're not looking at end of life. That's really truly their time horizon, or even the beneficiaries' lives. So you have to maybe take a little bit of a step back, get out of the weeds to figure out what target rate of return is appropriate for you, and then devise that strategy.
Yeah, absolutely. And it's not easy, right? I mean, once you retire, it's tough because you've spent your whole life accumulating assets, and people tell you save, 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 you've got a paycheck coming in. Now all of a sudden you may never earn another dime, and you've got to start spending down your assets, and that's a tough mindset shift, and that's where having some sort of prudent reserve, whether it's 6 months, a year, it depends on the person, sitting in cash, and that's where having those short-term safe bonds for the next couple years comes into play, because it is hard to all of a sudden know that you're retired, you're never going to earn any more money, and now the stock market's falling. Now it's this past March, and stocks are collapsing, and your portfolio is evaporating. That's where having those safe assets for the next couple years comes into play.
As long as you're invested in the right portfolio, you can weather any storm if you have the right plan in place. And we want to help you with that by going to our website at yourmoneyyourwealth.com and click on that special offer. It's getting a better investment experience. Learn how to invest like Warren Buffett or even Brian Perry.